Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to, even when they're not trying to be totally clear. Today we're diving into a Form 8K filing from Aether Holdings. Think of it as a corporate quick update, and this one has a pretty big announcement they're going public. But did it all go to plan? That's what we're going to decode. Aether Holdings just filed a Form 8K, which is basically an update about major events. This one is all about their initial public offering, also known as their IPO. An IPO is when a private company offers shares to the public for the first time. The report is dated April 11th, 2025, but it includes information going back to April 9, 2025. This gives us a little timeline of when things happened. Okay, now for the main event. This section talks about the agreement they made with the companies that helped them go public. These companies are called underwriters. They help sell the company's stock to the public. Aether Holdings entered into an underwriting agreement with the Benchmark Company and Axiom Capital Management. These companies acted as representatives, meaning they spoke for all the different underwriters involved in the IPO. Basically, they are the main guys helping Aether Holdings sell its stock to the public. Scroll shares of the FE company's common stock scroll. The company offered 1,800,000 shares of their stock at a price of $4.30 per share. That's the offering price, the price at which the stock was initially sold to the public. The deal closed on April 11, 2025. That's when the company officially became public and got the money from selling its shares. They raised about $720,000 after deducting all the costs of the IPO. The stock is now trading on the Nasdaq Capital Market under the ticker symbol Aether. This means you can go and buy or sell the stock if you want. There's also something called an over-allotment option. This means the underwriters have the option to buy an additional 270,000 shares from the company if there's a lot of demand. This helps stabilize the stock price after the IPO. The whole process was done under a registration statement filed with the Securities and Exchange Commission, or SEC. This is basically the paperwork you need to do to go public, and it includes all sorts of information about the company. Aether Holdings has agreed not to sell any more shares for 180 days after the closing date. This is called a lockup period, and it's designed to prevent the company's insiders from flooding the market with shares and driving down the price. As a bonus for helping them go public, Aether Holdings gave the representatives a warrant to buy up to 126,000 shares of stock. A warrant is like an option. It gives them the right to buy the stock at a certain price in the future. If the over-allotment option is exercised, this number increases by approximately 18,900 shares. The representatives can buy these shares at 4x30s each, and they have 5 years to do it. They can't sell or transfer the warrant for 180 days after the closing date. This gives the underwriters an incentive to make sure the stock does well after the IPO. The company also issued press releases announcing the pricing and closing of the IPO. These are basically announcements to the public about what's happening. Finally, the filing includes exhibits, which are basically attachments with more details about the agreements. Now, what does all this mean? Aether Holdings has successfully gone public, raising a little over $6,500,000 after expenses. Whether that's good or not depends on what they do with that money. Aether Holdings now faces the pressure of being a public company. They have to report their results every quarter, and they have to deal with the scrutiny of investors. They have to grow their business and deliver on their promises. The company now has access to the public markets, so they can raise more money in the future if they need it. But they also have to be careful not to dilute their stock too much, which would hurt existing shareholders. One risk is if the company fails to meet expectations, the stock price could fall. If they don't use the IPO funds wisely, the stock could tank. The lockup period is another risk because when it expires, insiders could sell their shares and drive down the price. Ultimately, Aether Holdings' success will depend on its ability to execute its business plan and generate profits. Going public is just the first step. In my opinion, its business plan is a bit risky. However, they appear to have a good management team, so let's see how it works out. Thanks for watching. If you found this helpful, please like, subscribe, and comment below. What do you think about Aether Holdings going public? Let me know in the comments.